What's going on, guys? It's Tremaine here, the most disciplined day trader on YouTube. We have a trade breakdown for today's trade I took on my live account this morning. Quick side note, if you want to watch the full live commentary, okay, all of this analysis was shared in real time in our public tape reading stream earlier this morning. I will link that live stream down in the comment section below. And I highly recommend, after watching this trade breakdown, you go watch the live stream and kind of follow along to see what I was talking about. So here we go, NASDAQ daily chart, all-time highs, clearly a draw for this week. We're not interested in predicting highs. We're not interested in forcing a bearish bias longer term. Okay, if NASDAQ is looking bullish, if we keep posting all-time highs, we're focusing on all-time highs, and we're not trying to be a hero and predict the top. So all-time high here, ran out there, current all-time here, ran out. Now this is our current all-time high, and I am still bullish until NASDAQ shows us otherwise on the daily chart. Previous day's trading, okay, we had an inside trading day. Now I shared this earlier in the stream. Yesterday, we did not take out previous day's high or previous day's low, okay, meaning we had an inside trading day. Now the general rule of thumb with that is whenever we have an inside trading day and that's how we close, the next day, or at worst, the very next day after that, you can expect a large range day. Okay, so I'm coming to the charts and I said, okay, we had an inside trading day yesterday. Expect a large range expansion today. All-time highs is likely to be tagged here. Let's head to a 15-minute chart. Here I have our current new week opening gap. Here's that buy-side liquidity pool, all-time highs, and I have some opening prices as well. Midnight open, 8:30 open, and then 9:30 open here for reference, so you can see where we opened at by 9:30. So you can see once we tag buy side all-time highs here, we also have relative equal highs here, really focusing on the bodies. We are really in a premium, okay? Once we trade above these highs and all-time highs, we're above both of our opening prices, all three opening prices if you want to include the 9:30 open. We are not looking for longs up here. Okay, now if we were to just take out all-time highs and continue rallying higher, rally 1,000 points higher, that's fine. That just wouldn't be a trade for me. This much of a premium, I'm looking for shorts, but NASDAQ has to prove to me that it's weak. It has to prove to me that it's willing to rotate lower. And we're going to talk about what that looks like on the lower time frames. Here's a 5-minute chart, and I have regular trading hours toggled on. All right, so this is all regular trading hours. You can see where we closed with yesterday's trading. This is where we opened up at 9:30. And notice what we've done here. This is narrative, okay? Let's discuss it. We open up at 9:30 and immediately trade higher. What is the average retail trader thinking? I want to go long. I want to chase it. Man, this thing is going to the moon. We are so bullish. All-time highs. Let's go. That's what they're thinking. When we open like this and it's just off to the races, everybody's looking to buy. They're looking to buy these fair value gaps. They're looking to buy on the breakout of this high. They're just looking to go long, long, long. That is not what we're trying to do, okay? That is retail logic. That is neophyte logic. We understand that when we open and trade up like this, we're working ourselves into a deeper premium. Look at the buy side all above this consolidation. When we open above the buy side here and trade one tick, everybody who has buy stops above these highs on regular trading hours, they are triggered into the marketplace going long, meaning they're profiting on the breakout of this high. So I don't want us to open at 9:30, trip them in long, and then have them profit all the way, for the entire session. That's not what we want. Trip them in long, that's fine. Rally up just enough to clear out all-time highs, then run it against them and punish everybody who's chased that initial move after the opening bell. Also, keep in mind, okay, we're above the midnight open and we're above the 8:30 open. Rich premium. We're not interested in chasing this higher. Opening range Judas swing. Your opening range is from 9:30 to 10 o'clock. That is the trap that most people fall for. Now, can you make money in this move going higher? Yes. But I like participating in moves like this after the liquidity has already been engaged, after I know that retail is going to get caught offside because they're chasing. I want to participate in this move and let this pass me by. 1-minute chart here, still in regular trading hours. Okay, you can see that opening range, we open at 9:30 and it's just one directional. I don't care about any of this. I'm not looking to buy any of these fair value gaps. In the past, over a couple of years ago, I would be buying up here, and I would constantly get smoked because I was trading patterns. We do not trade patterns. We trade based off narrative. So I don't care that we have a fair value gap here. I don't care that we have a fair value gap with a bullish order block. None of that has any importance to me because the narrative holds more weight. Judas swing, this is trapping everybody into long positions, running on liquidity. This is the move that I want to participate in. All right, here is the executions. So I'm highlighting my entry here. Before we get to that, fair value gap, okay, people are looking to buy that. I want to fade it. I'm not looking at this to take us higher. We've already engaged buy side liquidity. So we chop around in here, get beneath the low of it, fail to trade back to the low end of the inversion fair value gap. That's a bearish signature. Market structure shift beneath that low, and we get displacement. Once we get this candle here, that tells me everything I need to know, because remember, people are already chasing this move straight from the opening bell. It's time to run against them. Balanced price range, we have a single pass up with this up close candle here, and we have a single pass down with this down close candle. Now my entry, I'm already anticipating this fair value gap to act as a breakaway gap. We have this kind of slow meandering price action. It's not really moving with any kind of speed, and then boom, that right there, that speed, that displacement away from this kind of slow meandering price action, this displacement, I'm expecting that fair value gap to stay open. That's bullish order flow. Now, if I'm expecting this to act as a breakaway gap, combine that with the logic that this is also a balanced price range, because we have a bullish fair value gap here overlapped with one single bearish fair value gap here. So when this candle is trading live, this has already been efficiently delivered. It's already been delivered on the sell side, and it's been delivered on the buy side. So there's no reason for us to trade into this. Okay, it's efficient, it's balanced. It's like a brick wall for price. So I trust going short here because I'm not expecting this to be traded to. Stop loss is above mean threshold of the balanced price range. Okay, mean threshold is the midpoint. So I'm shorting here, expecting this to be left open. Balanced price range, stop loss above midpoint, few handles above it, targeting the high of our current new week opening gap. That right there is a bread and butter setup. Okay, all of this was outlined live on stream. Again, link down in the comment section if you want to check that out. Next slide, I'm showing my exit there, right at the high of the new week opening gap. And then I'm showing my stop loss and risk to reward a little bit over a 4-to-1. Entry, stop loss right above mean threshold, and then the exit there. Just throwing this in here just because. So yes, we have sell side underneath this low, but whenever we have like a just silly little obnoxious wick, the bulk of the volume lies in the bodies of the candles. Okay, so this sell side with the bodies is my focus. So right there, I'm turning the wicks off in the trading view settings, and you can see that's like a that's more than a quadruple bottom. What is that? 1, 2, 3, 4, 5. What is that? Quintuple? I don't know. But that's a lot of sell side there if you're just focusing on the bodies. And then if you just include the wicks, yes, we did take out that low, but that's not required. Okay. So that is the trade breakdown. Oh, live account. A lot of people love to see this stuff, but live account with TradeStation, and that win was almost $1,600. One contract, bread and butter setup, and I am done for the week there. So Discord members, we will be paper trading in the stream tomorrow. I am withdrawing these profits, and I'm done on the account, on my live account for this week. So Thursday and Friday will be on paper just for educational purposes and content purposes. But yeah, hopefully you guys found this all insightful. Comment down below what you think. Let me know if you have any questions, and I'll see you all when I see y'all. All right, peace.